Good morning from our global headquarters in New York. I'm Menace Crenny. Penny Berger is on assignment. You're welcome to Bloomberg Brief. Let's set your agenda. A boost for the bulls. Stocks power ahead. We hunker down for a marathon of Fed speak, including Chair Jay Powell. An AI victory. Micron gains the most in 6 months amid strong demand. OpenAI melts a 7% stake for Sam Altman. Supercharging the stimulus, Chinese top officials ramp up their urgent efforts to revive the economic growth and delivering fiscal support. Plus, don't miss our interview with the Irish Prime Minister Taoiseach Simon Harris coming later this hour. A very good morning to you. We've seen this a couple of times this week. The Chinese come out with a narrative of stimulus, and we see this little bid tone to U.S. equities, but it is the musculature of the narrative from Micron, the biggest chip producer in the United States of America, that really has imbued a sense of uplift here. Robust AI demand. They are the magic words for anybody out there. The Chinese go for forceful implementation of rate cuts. We'll talk about that in a moment. But where do we start from in these markets? Goldman Sachs say U.S. exposure is bullish and that the flows into U.S. equity markets, they're not dissimilar to what you saw in 2013. It's the starting point that matters. Roll it over, have a look at the bond market. What we've got is a smorgasbord of Fed speak today, including a pre-recorded speech from Jay Powell. But there's a host of other speakers there. What will they add? Will they add along with Adriana Kugler in terms of avoiding the unnecessary pain? Yields ticked down ever so slightly. We saw the 5-year auction and Oracle come with pretty big chunky pieces of paper on 5s, 10s and 40s across the curve. Yes, sorry, 10s, 30s and 40s across the curve. So there was a little bit of pressure in terms of the supply. Oil markets this morning, certainly worth noting. The FT carries a story, and the headline here is that Saudi to abandon $100 oil. Saudi has never, ever admitted to $100 oil. That's the fiscal break-even. The risk in the oil markets is that Saudi really goes for market share, and they bring back the barrels that have been held off the market. Oil down, Brent down 1.88 at 72, and WTI 68.33. So there's pressure in the oil markets on the supply story. I mentioned the rally in stocks in the US, but globally stocks are rallying as China pledges more fiscal aid. Jill DeCease is with us in Hong Kong. Jill, I look across the narrative this morning, and I think we should hone in most of all on the housing stimulus that they want to bring to bear, because that is where the middle class are hurting the most.
Yeah, that's right, Menace. I think you're exactly right there. So look, I mean, this was a pretty broad-ranging Politburo meeting, it seems, talking about all types of stimulus, but they were really kind of honing in on this idea of stopping the housing market, the real estate market, from declining. That's pretty forceful language that we really just haven't heard directly from the Politburo before. You know, as we know, Menace, the real estate sector has been one of the biggest pain points, if not the biggest pain point, over the last 4 years or so for the Chinese economy. So this idea of sort of trying to limit the creation of new housing supply, particularly on the residential side, that being a big focus of the Politburo today. But of course, as you mentioned earlier, you know, they're talking about this idea of implementing forceful rate cuts as well, also language that you don't really hear from the Politburo, something that we had really, you know, kind of started to hear from the central bank governor just the other day when he was kind of telegraphing this idea of more rate cuts. So all of this in tandem with each other, man, is just really tells you that they're stepping up a lot of policy support here. Now, as these things go, Politburo does this big declaration, and then it's really up to the individual agencies in China to, you know, come through with specific details. I suspect we're going to get more of that in the coming days and weeks. Next week is a big holiday in China, but, you know, perhaps a bit before then or after then, we'll actually get some direct specific policies on how exactly all of this is going to help the economy.
Jill, no time off for you once these measures start to come through. Lombard Odier say it's a step-by-step, drip-by-drip series of announcements, but it is all about the execution. Jill, great reporting. Jill DeCease in Hong Kong. My guest this morning is Alfonso Peccatiello of the Macro Compass. He weighs in on the recent moves in China, saying this: the new stimulus package still doesn't address the main issue. You can't revive a dying patient with some adrenaline shocks unless you really address the underlying cause. Let's bring Alfonso in. Alfonso, good to have you with me this morning. I mean, that's a pretty dramatic. It's a dying patient who's getting shocks from adrenaline. Just how much of a left tail risk and how much pressure is China under?
I would say quite a lot, Menace. And let's use another metaphor a bit better than a hospitalized patient. Let's say you can lead a horse to the water, but you can't make it drink. Let me try and explain what I mean. So the packages that have been announced so far with details from the Politburo have to do with a couple of things. First, cutting rates. Well, Japan in the 90s, during the real estate deleveraging episode, tried to do the same. 10-year Japanese rates went down from 8% to 1% in 10 years. What did it do to the real estate market in Japan? Nothing. And why is that? Because lowering borrowing rates, trying to lure property developers and households to borrow right after they've been burned by excessive leverage, well, that's not going to work. Lowering interest rates is not a good enough incentive to get people to actually borrow again and run the same risk of deleveraging all over again on their balance sheets. The second thing they announced today, it's quite interesting. It's basically injecting capital into the banking system in China. That's more relevant because what you're trying to do is first fill the hole of negative equity that all these property developers and these loans that have gone bust have actually caused in the balance sheet of Chinese banks. And importantly, if you recapitalize banks, you give them a better incentive to lend money. The problem again is, are there willing borrowers in China right now?
Well, that comes down to the fiscal adjustment. We've got the monetary intonation, but no fiscal adjustment. Just square this for me, because you've got this bid tone to U.S. equities on Monday when we had the first flurry of this narrative. Today, as we go to the end of the week, another flurry on the upside. What I want to try and understand, if you're saying that this could be Japan 1990s, what is the reverberation for global risk if they don't get it right and they don't do the fiscal in conjunction with the monetary?
So I would say, Manus, that people should remember trading Chinese stocks is not trading the Chinese GDP future. There is no Chinese GDP future here. You're trading Chinese stocks. Chinese stocks are also a matter of liquidity. They're a matter of sentiment. They're a matter of how much people are short on Chinese stocks. And when you announce a facility that basically kind of kills the shorts, or it's the version of the Chinese, let's say the Fed put basically body in China, clearly you're going to have a microstructure reaction to these shorts being cleared out. Please understand the Chinese stock market is not the Chinese economy. It can be the furthest thing away. Now, fiscal is the most important thing here, Manus, because when it comes to lending, you have to have willing borrowers. When it comes to fiscal injections, you don't. You're going to cut taxes. You're going to send people money. You're going to put money in their pockets, and you're going to revive property developers. Without their consent or not, you don't require willing borrowers.
Well, let's focus on our monetary policy here in the United States of America. I don't know whether we're going to get to 1%, but this is what you say. There's nothing to celebrate. The Fed's policy is still dangerously tight. The Fed needs to do more, or it risks falling behind the curve. So define for me what dangerously tight is then.
So look, Manus, it's pretty simple. When you consider a Fed fund rate, which is today 4.75%, alone, it really doesn't mean much. You have to compare it against something that is known to be the equilibrium rate, which is unobservable, or you have to compare it, I think, to something much more tangible, which is the current economic cycle. So what I do is I look at nominal growth in the US, and then I compare it against Fed funds rate. And historically, whenever Fed funds rate have gone above the level of nominal growth, well, normally policy has been considered to be tight. It has caused problems to the economy and to markets down the road. Well, today, guess what? Even after the 50 basis point cut, if you look at the broad range indication of nominal growth in the U.S., policy is still tight. Now, the good news is that the Federal Reserve at least is getting going, right? It has done 50 basis points. The problem is that you need to continuously adjust this policy to being looser and looser if nominal growth keeps declining. And what I'm not sure about is that the Federal Reserve wants to do this proactively. In my opinion, it's going to be more of a reaction, a delayed reaction to negative data, which generally speaking is not good news for market. You want the Federal Reserve to be ahead of the curve, not behind the curve. Okay, well, we'll hear more from the Federal Reserve, the heads of the Federal Reserve throughout the day. A smorgasbord of speak, including Jay Powell. Alfonso, thank you very much. Alfonso Peccatiello, the Macro Compass, assessing the stimulus measures from China and beyond. Other stories on your Bloomberg terminal. This is what we got for you this morning. The Swiss National Bank cut borrowing rates by a quarter for a third straight meeting. The central bank warned of more cuts to come if needed as it attempts to contain the strength of the Swiss franc. SNB President Jordan referenced the reduction in inflationary pressure as the factor in today's easing. The New York City Mayor Eric Adams has been indicted following a federal corruption investigation. The probe first became public when the home of an Adams campaign fundraiser was raided last November.
In recent weeks, the mayor's chief counsel and police commissioner have quit, and 2 former fire department officials were charged with bribery. Disney is laying off corporate-level staff as part of an ongoing optimization work. The company said in a statement that the website Deadline reported that around 300 were affected, with ESPN and the theme parks not involved in this round of layoffs. Disney got to work in cutting costs last year. Ultimately, 8,000 positions affected as the company looks to improve its profitability. Coming up, OpenAI discussing giving Sam Altman 7% stake in a for-profit shift. More on our scoop. That's next. So we'll speak throughout the day. We'll look ahead with Katrina Dudley of Franklin Templeton later this hour, right here on Bloomberg. Good morning from New York. It is Bloomberg Brief. I'm Manus Crenny in New York. Bloomberg has learned that OpenAI is considering giving the chief executive Sam Altman a 7% equity stake. It's also weighing a restructuring to become a for-profit business. Robert Lee joins me from Bloomberg Intelligence. Robert, the latest move, I mean, this is an interesting pivot to for-profit. You would say part of this is because of the capital raising that they're doing at the moment. Is this external pressure for an internal shift?
I think, yes, that's a very good way of looking at it. At the end of the day, if you're bringing in external investors, they want to try and make a return on their investment, don't they? They want dividends, they want a profitable business, and they want, ultimately to make a capital return. So if that's the case, then you're going to need a shift in the corporate structure. And as is well known, when this business was set up in 2015, it was essentially on altruistic charitable business. But we've seen a sort of shift to an interim model at the moment. And if this unconfirmed story is correct, then maybe Sam Altman takes a 7% stake as linked to part of this fundraising, which they're looking to pull off at the moment, potential valuation of up to $150 billion. So I think really that's what's underpinning this news we're seeing today.
And of course, there's a continuation out the door. Mira Murati is leaving. And I think you said to me, out of the 11 original founders, 9 of them have gone. Listen, one thing which has helped markets this morning is Micron. This is one of the biggest chip producers here in the United States of America. We're soaring because it's a much better read on the results. And again, this speaks very much to the high end of the chip business, doesn't it?
It does. However, I don't want to take the wind out of your sails here. Context is everything. If you look at the share price, the share had approximately halved in value. So, due to concerns on where we are in the cycle, due to macro concerns, because ultimately the majority of Micron's chips, whether they're DRAM or NAND flash, are going into mainstream smartphones and laptops. So there's concern on the bulk of their business. However, what we saw last night is that the results came in a little bit better than expected. The guidance was better, and also they're beginning to play catch-up, or there's more, should I say, tangible evidence they're playing catch-up on something called high bandwidth memory. Guess what that goes into? That's right, AI. So, AI, again, is the buzzword of the year, or the buzzword of the millennium. They sort of pressed all those buttons last night. I would say we've seen a bit of a relief rally on the back of that. Is that sustainable or not? Well, we'll have to wait and see.
I'm going to see you and raise you. You're not bursting my tech bubble this morning. JP Morgan has an overweight at $180. So there's miles to go before we sleep on that at the moment. Listen, Robert, thank you very much. Robert Lee there from Bloomberg Intelligence. Let's stick with the tech theme. Ireland is expecting a €14 billion windfall from Apple after the iPhone maker's EU court defeat. I caught up with the Prime Minister, the Taoiseach, Simon Harris, on whether he ring-fenced the money for housing in a fund.
For a number of key infrastructural areas, and we will set them out in the budget. As you rightly say, it's not a matter for the budget. We've yet to receive that money. But I do think it's appropriate in our budget that we would provide clarity as to the principles we'll apply as to how to invest it. And let me assist in suggesting that I think those key areas are around water, our water infrastructure, our energy grid, and housing supply. They're 3 areas that I think could I suppose, really give a benefit to their country's economic security into the future.
You are possibly going to face a Trump presidency who's made it very clear he'll give potentially tax breaks to bring it home, bring production home here, bring manufacturing home here to the United States of America. How are you preparing for that kind of headwind?
Well, being honest, and I don't want to get myself involved in American presidential politics, but being honest, we as a country and as an economy and successive governments have dealt with a whole variety of US administrations over the years, and it's their right to pursue whatever policies they want. But against that backdrop, throughout the decades and the last Trump presidency, we still managed to grow investment, grow our ties, grow our jobs. So I'm conscious of what people say during campaigns, but I'm also very proud of the records that we have and the offering that we have for people who want to do business in Ireland. And my message to them is that I hear them when they say we need to invest more in our infrastructure, we need to invest more in our energy grid, and we need to continue to invest in skills and education. So I'm keeping my eyes on the offering we have and allowing other people to do their bit too.
Well, in preparation, potentially, both candidates are talking about tariffs, Trump and Harris. An extension of tariffs is a possibility. How is Europe viewing the potential for a trade war? Maybe that's the bigger question.
Yeah, I think it is. I think it is a bigger question. I wouldn't describe it as a trade war, but the job of work.
What would you describe it as?
The job of work that Europe needs to do to become more competitive. I think one of the biggest challenges I see as a member of the European Council now is that there are so many geopolitical pressures in terms of war on the continent of Europe and the likes. We have to make sure we carve out time, space, bandwidth to work on the competitiveness agenda. So Mario Draghi, for example, has just done an excellent report in terms of how to build a competitive Europe. Letta, the former Prime Minister of Italy, similarly, on how you complete the work of the single market. We need in Europe to not be in any way complacent about our competitiveness. We have a lot of work to do in relation to that. And when Ireland speaks to the United States now, when Ireland speaks to investors, it doesn't just speak as Ireland, of course it does, but it also speaks proudly as a member of the massive market and union that is the EU. So we need to see from the new Commission a very ambitious programme around competitiveness.
My conversation with the Irish Taoiseach Simon Harris, the Prime Minister there. And just think of the size of American companies in Ireland. You're looking at some of the biggest ones, Apple, Pfizer in terms of the pharma side. So it is critically important to Ireland and to the future of the tax take that they keep those jobs in Ireland and the tax take. The Taoiseach in New York. Coming up, a 3-week ceasefire, prevent all-out war. That is the objective. We will discuss the proposal on the table next on Bloomberg. It is Bloomberg Brief. I'm Manus Cranny in New York. The US, Europe, and a number of Arab nations have put forward a 3-week ceasefire proposal between Israel and Hezbollah. In reaction, the Israel Prime Minister, Benjamin Netanyahu's office, has said this: the news about a ceasefire is incorrect. This is an American-French proposal to which the Prime Minister did not even respond. Jumana Busechi joins me now. Jumana, I mean, that does not set the table well for what is potentially on the table. Who's making the proposal, and what exactly are the details?
Yeah, so those are fresh comments that we just got now from the Israeli Prime Minister Benjamin Netanyahu. And of course, there has not been an official response. He put out a tweet saying there has not yet been an official response. So we don't know yet whether Israel are actually going to subscribe to the ceasefire proposal. But it is worth highlighting that there has been progress on the diplomacy front in the last 24 hours with that statement that was put out by President Biden and President Macron alongside the support of EU leaders and key Arab nations as well, proposing that ceasefire on the Lebanon-Israel blue line, which is the demarcated border. But we have not had an official response yet from Israel. From Lebanon, again, not an official response, but I did have the possibility, the opportunity earlier to sit down with the Lebanese economy minister, Amin Salam. And I started off the interview by asking him how open the Lebanese government would be to adopting the ceasefire, and also how likely is it that Hezbollah also sign on to the terms of the ceasefire?
And that is the critical point, isn't it? The Israelis have time to respond. Biden says he's using every bit of energy. When it comes to de-escalation, I caught up with the Irish Taoiseach yesterday. He said the mood here in New York at UNGA is not hugely optimistic. Netanyahu will speak today, we understand, today or tomorrow. He's on his way to UNGA. What is the narrative you think that he's going to deliver tomorrow?
Yeah. Yeah. So I actually just wanted to reflect on the comments that the economy minister did tell me, because in response to that question I asked him, he said that he thinks that Hezbollah have shown some flexibility in the last 24 hours and that they are actually moving towards potentially signing up to this truce. So the comments sounded quite promising, at least from the Lebanese perspective. But what we're hearing now are reports of further airstrikes, ongoing, continual bombardment across various cities around Lebanon. The death toll is more than 600 since the beginning of this week. And again, 2,000 people wounded just in this week alone. And so the pressure is there. And the real question here, I think, Manis, from Israel's perspective, is since they announced this new war objective, which is restoring security to the northern border, whether they think that enough has been achieved in terms of diminishing Hezbollah's capabilities in order for them to be incentivized to accept a ceasefire. And it all boils down to that. It all comes down to whether they think the security of the residents will be intact if they start returning back to the border. But again, as I said, no official response yet.
No, well, there is just a tweet, as you said, just at 5:15 a.m. The Israeli military says it is striking Hezbollah targets in Lebanon. That is in the past 10 minutes. Jemana, thank you very much. Great work there. Bloomberg Horizon's Middle East anchor, Jemana Besechi. Katrina Dudley joins me next to talk markets. From our global headquarters in New York, I'm Menace Cranny. Welcome to Bloomberg Brief. Danny Berger is on assignment. Let's set your agenda. It's a boost for the bulls. Stocks power ahead. We hunker down for a marathon of Fed speak, including Chair Powell. Supercharging stimulus, Chinese top officials ramp up their urgent efforts to revive economic growth with vows to support fiscal spending. And VP Harris and former President Trump rally in swing states as we're 6 weeks out to the US election. A very good morning to you. We've got a nice bounce again in these equity markets. Definitely the alpha is in the tech. Is that more to do with Micron? I mean, they have fallen a long way from their highs, but they gave us the magic words, robust AI demand. You can throw in there a sprinkle of Chinese stimulus, the Politburo giving the narrative, what will actually be delivered. They talk about big and muscular moves in terms of rates. It's about a forceful implementation of cuts. So the China tailwind is certainly playing across global markets. Will it last in US equity markets is the question. Nasdaq up 1.3%. Roll it over. Have a look at the bond market. Yesterday you saw Oracle come with $6.25 billion worth of paper across the curve, 10s, 30s and 40s. That put a bit of pressure. Yields drop ever so slightly this morning. You have 8 Fed speakers. To what extent do they reinforce the narrative about avoiding unnecessary pain? And that's what Adriana Kugler had to say yesterday. I leave you with a snapshot on oil. The FT leads with the main story, which is Saudi to abandon its $100 oil target. They never, ever had a $100 oil target. It's a fiscal break-even that the world refers to. What is the more important story here is if Saudi's ambition is to hold on to market share, what will they do in bringing supply back? Oil is down, stocks are bid. It's 1 week on from the Federal Reserve's rate cut of 50 basis points. My guest this morning is Katrina Dudley, Senior Investment Strategist over at Franklin Templeton. Good morning. Good to see you. We're sort of risk on, a mighty form of risk on in these markets. You've had a week to think about it. It's almost like nirvana for risk. Is it nirvana for risk for you?
No. Risk is always going to be part of our equation because we need to deliver risk-adjusted returns. So
right.
You cannot operate in a world where you take risk off the table. And sorry to be so passionate about that, but I do think it is such an important part of portfolio positioning and how investors are positioning in any of these types of rallies. So from our perspective, look, we're staying in the saddle, I think is the line that we're using, and we are optimistic about what's happening in this world.
When I look at the AI story, this morning I come in, Sam Altman being potentially offered 7% holding. He's a founder in OpenAI. It was set up for the good of the world. Here we are pivoting to for profit. What does that tell you about the evolution of OpenAI? They're in a funding round as well. We know that.
Yes. So first of all, he was offered 7%. If he was offered just 7% of a non-profit does not make money. So 7% of an entity that does not make money, what's the value of that stake? So the fact that most important is that they're actually converting from non-profit to for-profit, and they're looking to make some level of returns. But from an investor's perspective, what we want to consider is how does it change how the company is being operated from this shift in focus? And additionally, how does offering that equity stake change the way that Sam Altman operates the company? And they're the two things that are a little bit unknown as we look at the fact that they've offered this equity stake to him. Because, companies need to generate returns, but they also need to invest. And that's something that, with OpenAI, they've been investing and they've been investing and they've been investing without having that lens of return. Now, maybe they actually have to think about what are the returns on these investments.
Well, certainly Microsoft has got a hefty, $13 billion investment in them. So I'm sure that conversation is had. Let's just stay with the AI theme. I was looking at a Bain report this week. They talk about AI, the market being worth $1 trillion. You're going to get everybody giving you numbers. $1 trillion by 2027. But what I am interested in is hardware and services. Hardware will grow by 40%. Services will grow by 55%. Can you take that down from that helicopter view for me and translate it into strategy in AI?
Look, I think in terms of AI, we talk about AI as being $1 trillion market and $1 trillion investment, but it's actually an investment in productivity. And I think that that's really significant. And that productivity is a combination, as you've identified, of both the infrastructure, so you're talking about the hardware, as well as the services needed to operationalize that. Because just putting a box into a room with some AI maybe sitting on top of it doesn't do anything. And I can say, we're looking at AI as a financial services company. So I think that you need to have these services to operationalize. But I think the more interesting thing is the AI movement is actually reflecting what we're seeing in the global economy. We've seen some weakness in manufacturing, so we're not seeing so much growth in the manufacturing sector, and we're seeing growth in the services sector. And it's a real reflection of how our economy has changed over this period.
And you talk about that. You look at what's happening, Switzerland cutting rates today. You've got China talking about what they're going to do with interest rates, a forceful implementation of cuts. Now, many people say to me, I can live without China. But maybe it's a broader question. What China does has a reverberation in terms of global allocation, doesn't it?
It does, because China is an important economy in the world in terms of what it's doing and what it's investing. And I think what you need to take from what we've seen in the last few days is this idea that they need to stimulate, which means we have just a little bit of uncertainty in that market. And we've got within the United States, we have this bear-bull debate. And the fact is China was part of the bearish case. They weren't as strong as people were expecting. Now, you can also take this stimulus as supporting both the bull and the bear, which is one of those things that is very difficult in equity markets. You can say, well, it was worse than we thought, so they had to stimulate, which is fairly bearish. Or you can say it's a positive momentum factor that is going to support some of these underlying themes. We've got rate cuts. We have the 50 basis points that we've had out of the Fed. You've got other central banks looking at it as well. And so people are looking to adjust and to support. And I think that that's why we continue to think investors need to stay invested in this market.
Look, these are all layers of support for industry and for growth. And maybe that's where it translates from the equity side.
Yes. Look, industry is what makes this world go round. I mean, and people need to have, companies do work. So we need to have policies. You're seeing it with some of the, the positioning as it relates to different industries. You're looking at some of the merger news that we're looking at. But people in the United States have two objectives, and it's reflected in what the Fed is saying.
Yeah.
It's, first of all, it's low inflation. Second, is full employment.
Look, the Fed, to a certain extent, has taken some of the left tail risk off the table with the 50 basis points. We've still got a market that's pushing for more, pushing for 70 basis points, and we're at a coin toss, the toss of a coin of whether we get another 50 basis points. Do you think we will? And to what extent does that matter to your equity narrative?
I think, first of all, we need to remember that the next meeting and the next release is actually right around the election. Yeah. And I think that that is something that we have to consider, because the Fed has always wanted to be seen as politically independent. And so I don't think that we're going to get anything around this November timeframe. I think that.
But then that possibly leaves us 75 basis points at Christmas.
I don't think they'll do 75. He's already given us the signaling, and he's going to talk today some more. But he's already said, don't keep expecting 50. It's like we kind of gave it a bit bit of a push to start.
But then are we overextended on risk on the assumption that he's going to give us more?
I think we are. I think that it's going to be much more measured. I think on the, we've seen a Fed that's very data dependent and very hesitant. And I think what we got with the 50 is kind of the separation of two 25s because of just some timing reasons.
Part of the juggernaut in these markets has been luxury, and that's come under huge pressure. You say we should go bargain hunting in luxury now. Why? What is it? Is it valuation? Is it that the worst is past? Why bargain hunt there?
It's such an interesting term because bargain hunting and luxury, where you have expensive,
incongruous, aren't they?
It is that oxymoron. But the fact is that these brands have value. They have aspirational value as well, and so people continue to want them. And I think you've seen a sell-off on some of these names. You've seen it on some of the weakness in China. You've also seen it some hiccups here. Some of these brands haven't done well in terms of execution. And for me, there's some of the signals that said maybe some of the bad news, and a lot of the bad news is priced in here. And so you get this opportunity to buy what is Europeans' tech stocks, and that's the luxury sector.
There's very few bargains in a Louis Vuitton store.
I know, but just because the bags may not be a bargain doesn't mean that the stock isn't a bargain. And it's something I keep telling people is that great companies, wrong valuation, bad investment.
Keep buying the bags. Katrina Dudley there of Franklin Templeton, my guest this morning on The Markets. Coming up, we're about 6 weeks away from the US elections. We'll look at how Harris and Trump's latest pitch book is on the economic front, right here on Bloomberg. Bloomberg Brief. I'm Manus Cranny in New York. We're about 6 weeks away from the US elections. Kamala Harris and Donald Trump are driving their messages in the swing states. Who decide the race to the White House? Trump promised a manufacturing renaissance at his rally in Savannah, Georgia, a little bit earlier this week.
We're going to rebuild our manufacturing, and it's going to happen. It's going to happen fast and beautifully. And under my plan, American workers will no longer be worried about losing your jobs to foreign nations. Instead, foreign nations will be worried about losing their jobs to America. Your only worry will be deciding which job to take.
Meanwhile, Kamala Harris outlined her economic views at the Economic Club of Pittsburgh.
I'm a capitalist. I believe in free and fair markets. I believe in consistent and transparent rules of the road to create a stable business environment. And I know the power of American innovation. I've been working with entrepreneurs and business owners my whole career. And I believe companies need to play by the rules.
Let's bring in Team Bloomberg. We have Kayla Gardner and Stephanie Lai, who cover the candidates. Kayla, let's go to you first of all. Harris's speech yesterday, a very powerful moment where she said, look, I'm a capitalist. I believe in free and fair markets. But she really reached out to both the middle class and to those workers. Did she draw any clear distance against Trump in what she said?
Well, Harris really cast herself as both a friend to workers and corporate America. And yesterday, the big thing that we saw from her was this detailed document, 82 pages, that her campaign put out, really addressing some of the criticisms, both from Trump and at large, that her policies have not been very specific. And what was particularly new in that document, she is releasing a tax credit proposal called America Forward, which could potentially provide tens of billions of dollars for U.S. companies to compete against China and other nations, and particularly benefits for investment companies looking to invest in manufacturing, farming, energy, and communities that particularly have been hit hard by this. So she definitely drawn a contrast between herself and Donald Trump, who's also pitching himself as someone who can boost the manufacturing sector and really pointing to declines that happened, particularly because of the pandemic, in manufacturing jobs. And that is something that has risen under President Biden and under her administration. But she's really trying to play both sides of the coin here, trying to cast herself as someone who's going to be friendly and thinking about the middle class, but also someone who's going to be pro-innovation, pro-business, and really pointing to her time in California, meeting with tech companies, her time as Attorney General. She says she's going to hold companies and bad actors accountable, but she still wants to work with the companies that are providing the most jobs to American workers.
Yeah, the document is called, what, A New Way Forward for the Middle Class on Economic Policy. Stephanie, good morning. Just picking up on the manufacturing aspect that Akela mentioned there, that's being driven by Harris. But, of course, Donald Trump, he, in Georgia a little bit earlier in the week, he wants to take other countries' manufacturing jobs, again, really hitting home, bring it back to America.
Certainly. And as the economic proposals that Akela notes, this is something that Donald Trump has been hammering home on for the last couple of months on the campaign trail. His main pitch to voters is that he will be the candidate that can bring home as many manufacturing jobs as possible. And one of the main pillars of his economic proposals is by using tariffs. And so in his most recent speeches this last week in Savannah, Georgia, and reiterated in Mint Hill, North Carolina, he noted that he would allow for many of his other proposals, such as lowering the corporate tax rate from 21% to 15%, to apply to these companies only if they sell and manufacture their products in the United States. In addition to that, he also offered new incentives in his most recent speeches, saying that he would offer up federal lands as another incentive. He would appoint an ambassador to focus on this work specifically. And on top of that, he would personally recruit these foreign companies to come into the U.S.
Okay, let's bring it back to you. Biden and Harris are to meet Zelensky, and Trump yesterday, of course, had something to say about Zelensky. He was saying, you know, in terms of his victory plan and his presence here in the United States of America, casting nasty aspersions. That was the line from Donald Trump. Harris-Biden will meet him. How much information will we get on this victory plan today?
Yeah, well, President Biden and Vice President Harris will be meeting with Zelensky separately. That is not something that would have happened just a few weeks ago, but this is really a reflection of the fact that Harris is now running at the top of the ticket. And if she wins in November, she will be Zelensky's best partner in the world if he wants to continue to execute this war effectively. But really the question is, what is going to be the U.S. position on Zelensky's plan? They have not yet said one way or the other whether they fully are supporting it. So that's something I'm certainly going to be watching for. But these two leaders have met several times. She went to Switzerland earlier this year to really represent the U.S. in this peace deal summit that they had. So they have a very, regular relationship and communication between their teams. So that's certainly something that's going to continue. And she says that she's going to support Ukraine regardless of what happens in November. And she's really drawing a contrast with Donald Trump there, who has really yet to commit to doing that in the long term and says he wants this war to end. We don't know exactly what that would mean or what that would look like, but that could certainly not be what Zelensky wants to see going forward.
OK, Team Bloomberg, thank you very much for being with me. That is Stephanie Lai and Akela Gardner, travelling with the respective candidates. Bloomberg has learned that OpenAI is considering giving Chief Executive Sam Altman a 7% equity stake. It's also weighing a restructuring to become a for-profit business. Two big pivots if they come to pass. Let's get to our Bloomberg Intelligence Senior Technology Analyst, Mandeep Singh. Mandeep, part of the moment for OpenAI is they are in capital-raising mode. I just wonder to what extent, this is a conversation I had a little bit earlier, there's pressure from the external investors to make this pivot and get the founder bought in.
Yeah, look, I think it's fairly obvious that they have bigger plans when it comes to the next version of GPT and, what Sam Altman wants to do on the infrastructure side. The fact that they are looking to raise capital is all good, but, all the co-founders leaving the company, the timing may not be great given, they're trying to raise capital and project how this company is positioned for the long term. So clearly, there is some tension in terms of what the co-founders wanted versus what Sam Altman wants. And it's not clear yet that, they have the product roadmap to convince outside investors that this company will keep delivering.
And then, of course, we get another little bit of a shot in the arm as well, don't we, from Micron overnight. Now, this stock has been under pressure over the past sort of 6-7 months. But, of course, they uttered the magic words. What was it? A robust AI demand. Translate that for me. Was it robust enough in terms of the forward guidance? For obviously, the market's taken it well this morning. Your take?
Yeah, look, I think as expected, AI was a big driver of the print and the guidance they gave. But they also said PCs and smartphones will look good in 2025. I think that's what drove the upside in terms of expectations and gross margin. And overall, looks like 2025 will be a strong year for Micron and the overall memory market. And you're nowhere close to the top of the memory cycle, which everyone fears about.
OK, well, it certainly bid this morning ahead of the market open. There's the performance year to date, up 12.2%. Bloomberg Intelligence Senior Technology Analyst Mandeep Singh. Coming up in the show, we're going to set you trading day for you. We have a slew of Fed speak to get you through, and a pre-recorded message from the chair himself, Mr. Powell. Context matters on Bloomberg.
Many may say I should resign because I cannot manage the city while fighting the case. I can also understand how everyday New Yorkers will be concerned that I cannot do my job while I face accusation. But I have been facing these lies for months since I began to speak out for all of you and their investigation started. Yet the city has continued to improve. Make no mistake, you elected me to lead this city, and lead it I will.
That was the New York City Mayor, Eric Adams, reacting to being indicted following a federal corruption investigation. Now, the probe first became public when the home of an Adams campaign fundraiser was raided. That was last November. In recent weeks, the mayor's chief counsel and police commissioner have quit, and 2 former fire department officials were charged with bribery. The indictment is sealed, and it is not yet clear what charge or charges Adams will face. A little bit of breaking news now for you from China. We've been talking to you about the stimulus measures, their desire to recapitalize the banks. So here's some numbers for you. China are to issue $284 billion worth of special sovereign debt this year. And within the package, the Ministry of Finance plans to issue about $1 trillion yuan worth of special sovereign, primarily to stimulate consumption is what they say. They've got a plan to recapitalize the banks at $142 billion. As well as that, they're talking about forceful implementation of rate cuts. There's the yuan strengthening through the overnight session. Let's set you up for your day ahead. This is what we've got for you data-wise. You're going to get US GDP, jobless claims, very important jobless claims insight week by week. Durable goods orders come at 8:30 a.m. and then it's the beginning of the Fed speak. Boston Fed President Susan Collins, Governor Adriana Kugler will kick off a marathon of Fed speak starting at 9 a.m. Plus, President Biden and VP Harris will meet the Ukrainian President Vladimir Zelensky. That is in Washington today. They will both meet him separately. I'll leave you with a snapshot of risk across the markets. Some sentiment out there which is more to do with a technology boost really than anything else. Sam Altman to get 7% of OpenAI. Micron delivering robust AI demand. So you can throw your money down on this. As Katrina Dudley just said to me there, it's difficult not to be fully engaged in this. In terms of exposure to equities, Goldman Sachs make it clear. U.S. exposure is bullish. The flows that you're seeing are similar to that we saw at the end of 2013. It's the starting point that matters for these equity markets. To the bond market, yields drop ever so slightly. Let's see what the Fed speakers have got to say to shift the dial. Don't forget, 2-year paper just off its 2-year low as those inflation expectations nudge a little bit higher. Oil is offered down on the back of the Saudi story to maybe up their production.